Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
And welcome everybody. This is the Monday morning session. This is January 11th, and we're going to be going from about 8 to about 9:30. And trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objective, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubt. This is a live trading room. It is for educational purposes only. No financial advice or recommendation will be provided. Any trade taken during this live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money that you cannot afford to lose. Before trading live, always operate with a written trade plan that identifies the rules for entries, exits, targets, and risk management. And with that, let's go to the charts and see what I had an Aussie Swiss that I was looking at earlier. And that looks like that may actually be starting to materialize with a little bit of something here. Let me change my screen. And there we go. This is the Aussie Swiss pair. And let's see if I can get my, this is the FX book, or this is the RCS tool that we use. Again, this is what it does. It's showing the eight major currency pairs, and from a 0 to a 7, and we give it each one a value. The strongest is going to be at the top, the weakest is going to be at the bottom, and I've got it on 4 different time frames. We have it with a 1-hour chart, a 30-minute, a 15, and a 5. Sometimes I may switch this 1 hour over to a 3-hour, and it takes a little time for it to propagate. But I'm mainly looking at the 30-minute and the 15. Those are the ones that really get my attention more than anything. And as you see that the dollar is the strongest on the 15, on the 30-minute and the 15. And right now the CAD is the weakest on all 4 time frames. So we may want to be looking at the Swiss and the CAD are the 2 weakest pairs of the 8. The US dollar, the yen is strong on the 3-hour. The dollar is strong on the 30-minute, the dollar is strong on the 15, and the dollar is strong, and the euro is strong. Not so much on the 30. So I like seeing which one has the most, where's the strongest ones the most, and I would say right now it's the dollar. It's sort of leading the pack on all 4 time frames. So let's just take a look at the US dollar and the CAD. So we'll take a look at that pair. So we'll come over here with the US CAD. Oops, wrong one. I didn't mean to do that. Let's move this over the side. And we're going to, I'm going to take all these other lines off of here. Right now we can see that right now it's looking at it's breaking through out of a 15-minute Fibonacci line. That's significant. We're definitely in an uptrend on the 15-minute. It's well above, and we have a trend line that is just making a trend line. We can draw a trend line from here's the overnight. Here's Sunday's open. You see it had a strong move up, pulled back, strong move up, pulled back, retested this zone, and we have a trend line going from. I'm going to use this candle, which is the first significant high. And you can see that we have an anchor. Here's a hit. Here's a hit. So we're going to make this over this. So this one's validated. We have a pullback, and then we had another retest of this pullback. So this is where I'm going to be looking at. So I'm basically going to be looking at drawing this. Let me get some of these lines off of here. Here's a 15-minute fib line. Here's where the blue line was. This is where it pretty much broke out at the beginning of Sunday. Went up to, this is about 60 pips. I believe it's going to be about 60 between these lines. From the blue to here, that's 60 pips. So it has nice 60 pip move overnight. Got a rally, it based. Now it looks like it's trying to rally again. Right now it's going to be testing this upper trend line. I would not take it right now because it's too close to this trend line. But we may look for maybe a pullback. And we have another little bottom of the wedge, which is where this was tested. And we have another little pullback. So here's another rally, basing. And we're going to be seeing if it stays within this wedge period right here, this wedge area right in this area. There's our wedge. And right now it's this, you see it's getting rather steep right up here. If it gets up here, it's either going to keep on going, and then it may be looking at the next red line. But you're also going to have 3 zones right in the middle of between this red and this green. So if we go to our 5-minute chart, and we expand this here, you'll see here's our 15-minute zones, and here's our green, and here's our red. So right now it's trading halfway in between this one and this one right here. This is about a time where it's going to probably start bouncing. I would not take it long just yet, but I'd be looking for pullbacks back to the trend line and see if it will come on up. We had a nice big move overnight. So that's going to, we'll keep an eye on this one. We'd have an extreme here, we have an extreme here, we have an extreme here. And we also had the extreme way over here. So this keeps on, I would wait for this thing to come back, pull back a little bit, hook, and then see how deep it goes into here. If this thing can pull back, be retested with the bottom trend line, this would be the place where I'd want to take the trade. I would not want to try and take a breakout on this right now because it's got such a strong move up, and it would have to come back down, retest it, maybe make a lower high, and then come on breaking down. So right now we're just kind of keeping an eye on this one. Let's see, what's the other possibility we might have would be let's see, looks like let's take a look at that Swiss trade, or let's Swiss Euro, Aussie Euro Swiss was, I believe that we can look at. Aussie Swiss is the one I was looking at earlier. So let's put the Aussie Swiss on. And so right now we're just sort of hunting for trades, hunting to see that that's something that would make sense to try and make it. Here's our Sunday open. Here's the Sunday to Monday morning. So I'm just going to take these as both as one Sunday night, because that's only a couple hours before the new day actually starts. So I'm just going to take it from, here's the range, here's the high, here's the low. We'll draw this, the overnight high, come out to the overnight low. Find the midpoint, which is pretty much right there. We're going to lock this in. This is the range it's going in. So right now, it's going sideways in this range, but you can see it trends down, it trends up, and we'll see what's going to happen here. We have a nice strong move up. It's forming a wedge. Now the question is it going to break out to the upside to go higher, or is it going to, we have a little hook here. And I'm looking at this as being the bottom trend from here. We're on a 15-minute chart. There's our bottom trend line. Here's their upper target. Put our fib lines on and see where they are. See if there's anything close by that would make that would give us reason to look for a bounce point. And we have a red line, a red 15-minute here. Here's our blue. So we'll mark those off. $15-minute blue. I'm going to clone that. Here's another 15-minute blue down below here. This is our 15-minute range. And then we have a green line. And here's our red. And we'll come over here to our 5-minute chart. And we're going to see that we are, if we put our 5-minute fib lines on, and see here's our thirds. Here's the major lines, and here's our red, here's our 15-minute, there's our green. So what I'm going to do is I'm just going to move this up just a little bit just to align these with these fib lines, because that's going to be, those are significant price points. So I'm going to unlock this. I'm just going to tweak this right up here too, because that's, we know that that's where the prices were rejected before overnight. And there's our range. And right now we're just looking to see if we can draw a wedge with this. And so here's a high, here's a low, here's a lower high. And we don't know where the other higher low is going to be. So right now we're looking at a zone between here. Here's our wedge, here's a high, here's a low, here's a lower high, here's a higher low. But I'm going to flat line this thing right here at the bottom, because that's, I'd be more apt to flatline it right about here, right where this fib line is, and use that for a potential target. And right now we're inside the wedge. Nothing to do at this point other than to see if it's going to bounce off of the top into this zone. I would view this as being a trap right in here. We have our A, C, so this area right here, we know that this is a high, this is a lower high. If the price comes up and breaks where the C is, it still has to get through where the A is. And so I'm be looking at this as possible potential trap. And that trap could go all the way up to the top of where the overnight high is. It could go all the way up into there. And so I'm going to set the trap. And the same thing comes down here below. We have the B and the D, the potential D. Here's our 15-minute fib line. We usually can expect a bounce off of that. And we have a major price point. We have our moving averages. Here's our 30 period 62. Here's our 5-minute 62. They're right on top of each other. I would expect to see a zone, a possible trap in between right the B to D area, just like we did up here. So I'm going to set another trap here, because we have some significant price points. And we wait. And again, if it breaks through the trap, it still has to get through this trend line. Right now, you have a couple points of resistance where it could expect to bounce. We have moving averages that would be bounced. We have a low, a higher low. It may come back down to retest this area. If it breaks that, it still has to get through this. If it breaks through that, it still has to get through this. So there's several barriers before it gets out of the box area. Ideally, you would be looking at trying to find a trade. If it comes all the way back down, I would be looking to take it long right in this area, because that's where the overnight, the bottom third of the overnight price is. And we can fine tune it over here on the 1 minute. And we wait. Right now, there's nothing to do other than sit on our hands and keep looking for possible trades. You see it's breaking out of, now this was just a trend line. This was a subjective trend line. We can just keep on moving this out pretty much all the way over here. Or you can just put it all the way down to where it aligns with, a lot of times they like to just flatline it with the B area. But like I said, we have a major price point here at this 15-minute at 66.86. That would be an institutional level to possibly buy, to have buyers come in. And this would be an institutional level up here, the 68.8 area, for again the institutional sellers would come in, and they're going to try and drive the price up, get everybody, and then so they probably have sellers up here and you have buyers down here. All they're going to do is try and keep the price going in between this range until it breaks out, and then it's going to be they'd be looking for the next trend once it breaks out of this sideways motion. Matt, do you have anything to add to this?
Nope, not right now.
Okay. Do you see anything else that we could be looking at?
Not so much. I'm in a couple trades, but nothing.
Okay. What trades are you in? Let's take a look at them.
Well, I'm in a Swiss yen. I'm in Swiss yen short.
Swiss yen. Swiss yen. I don't know if I have that one up here. Swiss.
Yeah, it's one I've never traded before.
Okay. Okay, let's take while we. I'd have to pull that one up here. Let's just take a look at this U.S. CAD while we're here. You see, it came on up to the stop level. It bounced. It broke a little bit, closed a little bit above it, bounced. Now I would be looking to see maybe if it's going to come down and retest here. Now the question is, do we have enough room? If we get a confirmation to where this held, is there enough room to the bottom here to take a trade? And let's take a look and see how much room we have. We wouldn't be able to take it before. Let's just see how much room we have inside this range here. Right now we only have 15 pips. I like no less than, that's about as marginal as it gets. If that's a full range, by the time you get, if you were to take it on the breakout up here with this being a trap up here, knowing that we have a fib line up, here's a 15-minute fib, here's the 5-minute green. And you see this, if you look and see this came out right about in the middle of this whole range here. This is right in the middle of, if we put a 2-minute fib line on, you'll see that you're going to have a third and another third. This came right up past the first third and right in the middle. Let me just draw a little range here. And you can see right in the middle of this box is right here where this, that's where this is indicates where the middle of the box is. And you can see it came right up into the middle of the box. So right now, this is almost like a little bit of it's a rally. It's a little basing right here. So this thing could break through the top and come on up. I would like to see it break, come back, retest the trend line, and then go up higher again. But then you have this point right here that you'd have to get through. There's just not enough room for a scalping. It's marginal. Our spread on this is 2 pips, almost 2 pips. As you see, chain now is 1.6, and it was just 2 pips just a second ago. So if you have 2 pip spread going in, you have 2 pip spread coming out. That's 4 pips you got to be dealing with. Then you only have about a range of 10 pips to the upside. So if you're giving up 4 to get in, 2 to get in, 2 to get out, you're only looking at a possibility of 6 pips. That would be a real marginal risk reward ratio for you. So I would just pass on this. Monday mornings, a lot of times things are, the institutions are just getting their positions set up. A lot of times there's relatively narrow ranges, and sometimes trading on a Monday isn't always the most profitable way. I mean, there are trades out there, but a lot of times I'm more apt to take trades on Tuesdays through Thursdays. But we'll see how this goes. But that's on a 5-minute chart. But on a 5-minute chart, this is still not a real strong move. I mean, it is from a 5-minute standpoint, nice strong move, nice all 1, 2, 3, 4, 5 blue candles, no red candles in between. Have a red candle pullback right as it hit the top of this, pull it back. So you know there's some sellers right up in this top third. There's some sellers. And if I put my fib tool on, I'll put this on 2-minute, that'll break these up into thirds. And you'll see that this would be the top third. And this would be the bottom third of this range. So this would be supply or a trap. You can almost even look at this as being a trap right up in here. We have and so I'm going to put this on as, I'll make that a trap. And I'll make this, I'm going to use the bottom, here's the third, but I'm going to take another third to the bottom. And I'm going to make this a demand zone, which is the bottom third from here. Make this one demand. And now if it gets into this area, we may want to look at taking it short and see if we can catch a bounce back. If it comes up here, it just gives us a head fake, comes back in, it may come back down and retest this area.
Actually, Al,
Yes.
it looks like we got an arrow alert on GBP Aussie.
I see that. Okay, let's take a look at that. While we these don't take very long to analyze. British Aussie. There was okay, we're going to go and let me change my screen. We'll take a look at this one here. And I got to switch screens here. Thank you, Eva, for showing that one, bringing that out. Okay, so here's what we have with this. We have, everybody see our arrow charts?
Mm-hmm. Yeah.
Okay, all right. So here's how we're going to analyze this. Basically, we had the alert. It was a British Aussie sell at 74.91. So 74.91. That's this down arrow right here is set to sell. Now, what we need to figure out is, do we have room to the downside to be able to make our 20 pips? And it looks like we might possibly be able to do that. Let's just looking at it here. Let's measure. So from this arrow right here, this was the close of the arrow. Right up here, you could, even though this candle is red, based on the way this charting and EA is set up, even though that's basically it's a green. You can see where it closed. It closed to the upside of this arrow as opposed to the downside, which is rather unusual actually. Usually you'll have it close all the way down at the bottom here, but it really closed up here. But it did give us a down arrow. So here's where the entry of this would have been. This is about, and we said the entry was 74.91. 74.91 is right where my cursor is. And we're going to measure down here to see, do we have 20 pips to the downside to where we hit this green zone? And right now you see that's 36 pips. And it's actually on a pullback. So actually right now it's giving you a little bit better entry than where you would have normally gotten in. Our stop would be all the way up here to the top at 40 pip stop. So from the entry, there's our entry. So we have 37 pips. We're looking for 20. We want a 40 pip stop. And there's 40 pips is going to be right at the top of this trend line that we have here. That just happens to be that. How about that? And so as I look at this, we have the down arrow, we have room to the bottom. We have it's pulling back, which is going to actually give us a little bit better entry. As I look at as I scroll into, make this a little bit tighter, I'm going to see how many red bars do I have up top, how many green bars do I have below. Right now it's about even, so it looks like it's right now it's ranging in between here and here. So I would say this is an okay trade to take. What do you say, Matt? And Eva, what do you think?
I think so. I think
so.
It gets a green light from me.
It gets a green light from me too. So basically, we're looking at a British Aussie pair. And we're going to, I've got my entries already preset, so I'm just going to hit the sell button. I'm going to sell. And I'm going to set my stop, set my loss. So I'm going to come over here on where the sell was. I'm on the trade tab. If you look on the MT4 platform, you have the trade tab. So this shows you where your open trades are. If you want to see what the history is, you'd be looking at the account history, and that'll show you what all the closed out trades are. You can see what kind of profit you may have had. So I'm going to go back to my trade tab. I'm going to go on where the blue line is. I'm going to left click, and where it says modify or delete, I'm going to click on modify because I want to add my stop and my target in. Wait for it to come on up. There it is. And so on the MT4 platform, if you look at this, if you want a 40, because of the just the way they have this denominated with the pip values, a 40 pip stop would be 400 in this on the points. So 400 is a 40 pip stop. 200 would be a 20 pip target. So all I do is once you set these, I just keep these set at 420. All I do is click on this red bar, and you see that puts my 40 pips from where the price is right now. Now, if I wait it real long, that's going to change, but I'm just going to keep 40 pip stop. I'm going to click on the blue line, It's going to set my 20 pips from where the price is now. And then I'm going to click on to set. And you'll see that here's my stop, here's my target. Now, if you want to be real aggressive, you can move your target down a little bit lower. Or if you want to not be as much risk, you can move your stop down a little bit lower. But I just keep the recommendation right now is 20 pip target, 40 pip stop. There's lots of room to the downside. There's enough room. I've got a couple of barriers to keep me from getting stopped out. I've got a trend line coming down. I've got red arrows, and I've got a green target down here. And we know that this thing's sort of range bound right now. So there's my trade. I'm just going to be willing, if I can, I'm not going to push it. I'm just going to say I'm happy with the 20 pip target. And you have a high degree of probability that this is going to work. We did have a wedge, and it broke out of the bottom of the. You can see where this was sort of like a head fake. It came up, broke out, retested the wedge, came back, made a lower high, came back into the wedge, broke out, came back up, retested it, broke out lower, came back, retested it again. So right now, this bottom trend line seems to be holding, and the price seems to be staying below that. So I think this is a good trade. I think it's so, and if it's either going to win or it's not. If it wins, great. If it doesn't, well, we followed the rules and we'll see what happens. Now we just wait. Any questions about how we did that? Okay.
Pedro has a resistance zone, he says, at 74.81.
74.81, 74.81. Let's see where 74.81
Yeah,
is.
okay. Yeah, that's your target. That's your target.
Yeah. My target is 70. Well, actually, my 74. What was I? 74.70. So let's see, 74.81. That's
your target. Yeah, that's your yellow.
No, my target. No, the target's a red line right
lower.
here. Let me just take this one. I put that on there for some reason last week.
But then don't forget, Al, we've got to trust the indicator and the algorithm.
So we do. Yeah, we do. Yeah. What I'm trying to, I had this drawn from last week for some reason. I'm just trying to figure out why I did that.
Maybe because it is a resistance.
Probably because it's a resistance. Yeah. But we're going to take that off because right now we're only interested in seeing where the zones are. We're keeping this trading system really simple. You look and see, are you in the right direction? And we have pretty much equal zones. So I'm not seeing any overwhelming strong area as I scroll in on this. Let me scroll a little bit longer. All right, now you can see, now this looks a lot more conclusive. Look at all the red zones we have up on top. We have 1, 2, 3, 4, 5, 6 zones showing it's going short. And you can see where this was a nice move down, came back, retested, spacing, then it looks now it's going down again. So you want to be trading this in the direction of short, of being of a short, because you have much stronger zones, more red zones above than you do green zones below. We got the arrow, everything is moving, it generated the arrow, and now we're just going to go for the target. So the fact that we have all these red zones above tells me that the trend is down. We have a few green zones where that's where it bounced from. And actually here's a high, here's a lower high, here's a lower high, here's a lower high, here's a low, here's a higher low, here's about this an equal low right here, came back, retested it, and we can we're pretty safe to assume that it's going to come back down and retest this zone, but by that time we're going to be out of this 20 pip trade. And that's really all you have to do with these is just the analysis is that quick. Is a strong move down? Is it more of a downtrend than an uptrend? If it's in a downtrend and it gives you a down arrow, and you have the 20 pips to the next zone, and you have 40 pips and with some barriers in between, take the trade. And it's that simple to decide.
Yeah, you're absolutely correct, Al. It's like, don't overcomplicate this thing. It's as simple as you can get. This is so simple, like 16-year-olds are making money on this thing.
And we can make it more complicated. We can go and as we learn how to technically analyze these trades. And it's good to be able to do that, especially if there's some question as far as, is it that close that you say, well, maybe I should take it, maybe I shouldn't. You know, there's enough of these trades that come out throughout the day. You don't have to take the marginal ones. If it's kind of iffy, just let it go, because then all you're doing is you're starting to gamble. Now, there are some ways, and one of the things that we're trying to teach in this room is how to analyze these trades from a technical standpoint. And all it does, it gives you a little bit higher level of confidence about, well, maybe you can make a little bit longer, further target. Maybe you can make a tighter stop. But if you just stick with the 40-20 until you get better and more knowledgeable about trading and technical analysis, just stay with the 40-20 target stop area and just follow the rules, take the trade or don't take the trade, and then just let it do its thing. And it's that simple. And the less you complicate things, that you'll probably find out the more likely you are to be successful. Now, one thing that I want to show, let me see if I can bring it up here, is now you actually look, let me go back. So we took the trade, we're short on it right now. It's in a little bit of a drawdown, but I'm not too worried about that. And you just let it do its thing. Let's go back to our, we'll keep an eye on this trade, and we'll go back to our US CAD trade that we had. That was this one right here. Now you can see that with the, can we see our chart? See the chart? You can, this thing, well, you can see this thing's breaking out strong to the upside. The US CAD, so the dollar is getting strong, still strong to the CAD. And if you look at our RCS tool, you see the dollar is still strong on all 4 time frames. The CAD is still relatively weak on the 30, the 15, and the 5. And so if you look at our US CAD trade, you can see that you would not want to be taking this short. You're looking for a pullback. Now this thing just broke out of the top, came back. It did retest. And it looks like this thing is still going on up. So it broke the trend line. So now this thing is starting to trend to the upside. When I saw this move right here, I was expecting it may have come back a little bit stronger pullback, but it didn't. So now, right now, the target is pretty much coming right about to where the target is. As I look into see where this strong move was, where here's the origin of the move, came up to where it tested the wedge line, came back, it pulled back, and now the target is going to be pretty much right at it. That's what I would be considering its target zone right here. I would certainly not take it long right now. I'd wait for another pullback before I would take it long again.
So could everybody please just put a 1 in the chat if you understand what Al's doing, just so we can get an idea, please?
Or did we lose everybody?
No, I don't want to lose everybody. That's why.
That's a good question there, Eva.
Yeah.
Everybody understands this? Okay, we've got some people do, some people don't. Okay, so let me see if I can explain this just a little bit, because I don't want to overwhelm anybody. But let me just let me ask another question. Put a 1 in the chat box if you understand these Fibonacci levels that we have over here, this FRP tool. Do we have anybody that new here that doesn't understand? If you do not understand it, put a X in the chat box. Because I don't want to lose anybody. I want to make sure everybody understands what we're doing here.
Yeah.
We have some new people in the room here today. I don't want to lose anybody. I don't want to overwhelm anybody. We have time to be taking a look at some of these things, and
okay, well,
no one seems to be. Everyone must be understanding there, because I'm not seeing any X's here.
Okay, just ask questions. Make sure you ask questions in the Q&A. You can do it anonymously, however you want to do it. If you're not understanding something, not a problem.
Yeah. So right now I'm not seeing any place to get into this trade. And let's go to a higher time frame. We'll just take a look and see how this thing's playing out on a higher time frame. see if there's another zone that we're looking at to where basically when these things bounce, when these things take off, it broke out of the wedge, out of the overnight wedge, and now it's coming up. It's coming up to retest. Now, what the question is, how high can we expect it to go? There's a couple of different factors. One, you'll go to a higher time frame and see if there's another point over here to the left of the chart where we're not looking at, and seeing where was the price last before it's coming up to retest that area. So I'm gonna go to a higher time frame. And you can see, like, here's where the price is right now. We can see if all the way over here back on December 29th, it had a nice move down. It came back up, retested this. We have this nice moving average coming all the way down here. And it was following that moving average all the way down. And so basically this was the origin. This was how high it came, strong move down, came back up. Basically it found some sellers right up into this area. So if we go and use, and you can see this is the major fib line that we were talking about. And so we're going to draw a little area right in here. Way over here to the left is where the price was rejected, where the sellers came in. This is basically I'm gonna call this a supply zone. That's basically where that's where the sellers came in. And it was rejected. It trended on down, lower high, higher, or lower high, lower low, lower high, lower low. It's just trending. Came all the way down here, came up and retested this area. Now let me just take this off here. Let me take this off. And so this area this is where it was retested right in here. And you can see that it pulled down, came back up, retested. So there were some sellers right in this area. It came up, and you can see where this is where the battle was going on. So it did spike up a little bit outside of that, but then it came down and it was rejected. So right here, this area right in here is a major price point. And you can see over here to the right, as you keep saying, the price came up, came down into the zone, broke out, tested it, broke out, tested it, broke out, tested it. And as the more it tests these things, the weaker the zone gets. It's like a jackhammer, just jackhammering up, up, and up. Now it just broke out here. Well, once it broke out of this area, this is the area where it originated. Well, now we have some other sellers right up here. And this is right where it's at right now. It's coming right up into this zone, and it's a strong move up. I would be more apt to take it short up here. You could take it short with a rather short stop. I'm not going to do it because I don't know quite where it's at right now, but that's a 17 pip zone. But with that 17 pip zone, but you also have back to this white zone here, you would have this would be more of a swing trade, is you have the zone up here, you have 17 pips to the upside, but you also, your target down here is 34 pips. So that's a 2-to-1 ratio. So the odds is that you could take it in this zone, use this for a stop area. It's only the last time it reached this level, once it came back down and retested it, this zone hasn't been tested yet. We know that there were sellers up here to drive it back down. Now it's coming up to retest this area. If it comes up to retest, you could have a 17 pip stop to go short with it using just a couple pips above this zone as your stop loss, and you could take it down here to for your target zone. But I would like to see it draw a little bit of a wedge. We're on a 1-hour chart, so let's look at this on a 15-minute chart. Still a strong move up. There's no red, you see no red in there at all. Let's go to a 5-minute chart. Again, strong move up. Every 5-minute candle there's no red pullback at all. And it's coming right up into this supply zone. Now what you want to do is see it come up, pull back, come back out, reject it a little bit, have a lower high, form a little bit of a wedge right up in here. So right now I'm looking to see if this thing will form, now we're on a 5-minute chart, looking to see if it will form a little triangle. Here's a low, here's a high, here would be a higher low, here would be a flat top to high. Now if this price can come down and form bounce around here, and then break this, come back and retest it. Then we could go and use this area, this white area here as or this triangle. This is where the price left it, come back to see if it retests it, which you can see is right here in this white area. So right now I'd be looking at, I don't want to take it short yet because this has a lot of energy going up. You want to see it be reject a little bit, get a couple of red candles, retest this base right in here. So right now this would be, from an up move, I'd be looking at this as being a trap to the downside. I want to see it come down, break this area, come back, retest the area, and then go short, again. So I'm looking at a little bit of a pattern like this. So where it would come down. Let's say this would be the high. Wait till it comes back down, breaks, comes back up, retest it, and then here's our target. This is the pattern I would want to see before I would take it short. I want to see lose the energy, come back down, not be able to make a higher high, keep a lower high, maybe a little bit lower like that, doesn't have to be much, and then break through the bottom, come back and retest it, and then look for this to be the target. And that would be the technical analysis of the price range off of this move right here. We didn't catch this breakout, and so we don't want to be chasing it. And it looks like our trade's not working out all that well either.
Which one?
The one that we took on the British Aussie. We'll take a look at that here in just a second. Let's see, where am I at here? Looking at trying to change the settings, the color on this.
Oh, yeah.
So let's go back over to the, so we're just about, not stopped out yet, but it's getting close.
Well, you know what? You can't win 100% of the time.
Nope. I think one thing to maybe notice when we got that down arrow and it closed up higher, it basically got a down arrow on a red candle that was actually, technically it was a green candle. That might be something we may have to pay attention to.
Mm-hmm.
Now let me go and show you what I'm talking about here. Okay, so here we go. This is our trade that we took, the British Aussie. I'm going to expand this out a little bit here. And so what we had here is as long as the candles are below this blue line, they're going to be red. If they're above the blue line, they're going to be green. But even though it's a green candle, as we normally know of the candle price action, is that when the candle is lower than the open, it's going to be red. If it's higher than the open of that candle, it's going to be green. Well, as we look at this, if I can expand this here. This was a red candle, but as you can see with this candle, it actually closed. Here's on the candle that it generated the arrow. It was a red candle, but the red candle was actually a bullish candle. It basically, in normal candlestick terms, that would have been a green candle. And when it opened, it went higher. And this is where we kind of got in as it went up higher. And so right now, this thing is still a red candle, but now that this one just closed above this moving average. Why did that not turn green? I'm not sure about it. Actually, we have a green candle right now as this one closed. So right now we're actually sitting here with a green candle. We're not stopped out yet, but we are getting close. And if it gets stopped out, I get stopped out. That's just the way it works. It'd be one of those few trades that didn't work out. But you can see that this is actually a green candle. Even though candle is red, with just the way this EA is set up, it's showing a red candle, even though it's a green, because I'm not sure why it didn't turn green. But you see right now, the new candle is now green. So that's showing that this would actually be, I'd be more apt to, if we get a red candle or a up arrow right here, I still would not take the trade because one, it fit all the criteria. We have a lot of resistance up here. We have a lot of sellers up here. We're just coming up. It's basically what it's doing is retesting this zone. Here's a high. You can see this was the area where it was tested before. And if I use this crosshair, let me close this out here. You can see where this is where how deep this was penetrated. You see it's coming up, but still right now we still have it still hasn't taken our stop out. We're still making a lower high. Here's a high. Now that did take these highs out, but it's retesting this whole area over here. This was retesting. And it may take us out. If it may come up and just give us another chance to get back in again. It stops us out, but it may come up and it may give us a hit this area up here, get a strong move down, give us a red candle to go short, and then we try it again. But right now, it's just, it's still within the zone. It still hasn't taken our stop. And we'll just have to wait and see. Just be patient with it. Took some heat on it, but that's just what happens. And right now we're getting some dojis on this.
That could be a good sign.
Yeah. I mean, we may get stopped out, but also even if we get stopped out, we said, okay, then we wait and see what it does again. If it gives us a down arrow closer to where this zone is, it still may give, this may just be one of those little things where you just get whipsawed, but if it gives us a down arrow, we could maybe take another shot, and then our stop would be on the other side of this, which would be a little bit safer area. If we got stopped out and up here is 40 pips is up here, it'd be a little bit deeper into this zone. Here's a little zone here. Yeah, sort of like have a level on a level. And so it would break the, it'd still be up in the second level. I don't want to give it any more of a stop because the rules say you get a 40 pip stop. If it takes it, it takes it. But that doesn't mean it won't give you an opportunity to get back in and maybe make up that difference with another trade, or it's just reversing. And that's just what happens. You can see that it's strong move up, came back up, found some sellers right up in here, which are the same sellers that drove it down from this area. Came up, found some more sellers, and now it's coming back down to see if it's going to break this area. This is why you have the rules. You just stay with the rules. And so we'll just keep an eye on that. And actually, we don't really need to because we already have our plan set. The plan is we give it a 40 pip stop. Our plan is to take a 20 pip target and just let it do its thing.
Yeah, it seems to be going a little lower. You see where it says arrow pips there in the yellow? It's showing you that it's 28 pips away from where you got in.
Yeah, so basically we still have, I mean, we still have another 11 pips before we're going to get stopped out. So that's still a fairly comfortable, that's still a little comfortable. We certainly don't like have it go against us, but again, you just have to give it the wiggle room to be able to breathe in order to see if it's, the 40 pips was through lots and lots of testing that 40 pips generally works. And they didn't come up with 33 pips or they didn't come up with 28 pips, they came up with 40 pips. And a lot of times the moves are going to be, a lot of times these moves go in 7 pip increments, 7, 14, 21, 28, and that's right where we are right now. Next would be 28. So then we'd go from 28 to 35. You still have another 7 pip range to go through before we ever got to our 40 pips. So not too concerned about it just yet. I want to make sure that we have from where the entry, we entered at the price of 74.90. So 40 pips would be 74.30. And our stop is at 75.30. Our stop is right at 75.30. That's our 40 pip stop. Any questions? I'll give you some idea a little bit as far as what this thing looks like from what the history of this has been from this. This is I'm gonna pull up our FX book. Let me just show you just a little bit, give you an idea of how this thing plays out here. Let me get my FX book up. Give you some of the history on what this thing's done for the last couple of weeks. Let's see here.
Just an observation. So based on my experience with Arrow thus far, it's eliminated the vast majority of the emotion in my trading. Basically, I'll put the take profit as assigned and the stop loss as assigned, and I'll let it go. And I'll let it do whatever it's going to do because I know the win rate percentage of the system. Knowing that removes the emotion because I know that based on my own previous experience, I'll win 8 out of 10 trades. So I'm going to get those 2 loser trades. That's going to happen. And that means that the other ones are going to be winners generally. But you might get 7 losers in a row. But that doesn't matter, right?
Yeah, you're not going to win every day. This is the history of this account since I've been trading the Arrow system. Now, I'm going to show you a little comparison here as I go to custom analysis. This shows me the results from December 14th on up. And right now you can see, here's the percentage gain. These are the trades that I took. Right now, this showing 47 trades taken. And the ratio of, it's a 79% win, 21% loss. We just got another loss. I just got stopped out, so it is a loss. But like I said, you're not going to win it 100% of the time. There's no system out there that does that. And so, but if you look and see that, I'm going to show you what happens if you take every trade that's alerted. So from the time, we're going to go back 6 months. And you can see this is where I first started trading the Arrow. And what I did was when I first started trading, I took every trade that I generated, I took the trade. And you can see you're not going to win. You have to be somewhat selective of the trades that you take. Here's where I started taking. This is strictly where the rules were the rules that we just said, the 40 pip stop, 20 pip target. Is there enough room to the upside? Yes. If there's enough room to the downside, you take the trade. If the trend is up, you don't take the trade going down. You take a trade with the trend. And so once I started trading the rules here, this was December 14th, you can see how it changed from being like this to nice, steady, even. So now I'm not taking every trade, but I'm still going to lose on some of them. But you can see this is where the rule base is. This is where you're just taking, and that's why even though you get the alert with the Arrow, you can't take every trade because not every trade is a winning trade. And so that's why we have the rules. That's why we have these strategies that have proven, and the track records show that the certain strategies work. And so keep in mind that this is what you need to be looking for. Follow the rules. You're not going to win them all, but stick with the rules. And if the rules fit the trade, you take the trade. That's all I have to say about that. Let's take a look at our US CAD trade here right now, or US CAD position. you see where we had a nice strong move up, it's back, it's retesting this zone right now. And it's still, again, this would be like trying to catch a knife. It's just really sharp moves up. Wait till it loses the energy. Wait till it finds, wait till the sellers kick in. Wait for it to pull back. Wait for it to come back and retest where the sellers are. And then you want to be taking the trade. That's why we're doing these little wedges. Every strong move up usually forms some sort of a wedge at the end of the move before it starts to correct. Right now, we're just kind of moving this around. We're flatlining the top. So here was where there was a high. Now we have a higher high. Actually, if you look and see where in this zone, here's strong move up, here's it's basing right now. So we're looking, that's what we're looking for, seeing where the basing is. I should do it this way.
Matt, are you around?
I am here. What's up?
Could you let Christine into the room, please?
I certainly will.
Thank you.
Certainly
Okay,
will.
so strong move up. And you see this little red candle right here? That's where there's some rejection going on here. And so this is where the sellers are now starting to come in a little bit. So I'm going to draw a little bit of a wedge. I'm on a 5-minute chart. I'm just going to draw a little bit. So here's a high, here's a low, here's a lower high, here's a higher low, here's my wedge. I'm going to flatline the top of this because I don't want, as long as it keeps making new highs, I want to, as long as it keeps making new highs, especially while it's in this zone, I'm just going to keep this thing, just keep raising this. Like here was a high. Okay, I'm gonna just take that up to the next one. If this one breaks, goes up, I'll make another high. Right now, this is the highest high. Kind of make this even right up here at the top, make this right straight across. And now, and this one I'm going to be putting in, here's the low. So here's where it starts. Nice move up, pulled back, made a higher high. So this is where I am right now. And I'm going to pull this all the way over so I have a nice clean little triangle. And right now it's inside the triangle. Once it breaks the bottom, comes back and retests the triangle at this extreme, then we can be looking to see, try and get our target. Right now it's no trade because it still has some upward momentum. We'll see if we can break through this range right here, but also keep in mind you have a 15-minute fib line right up here. So it could come up and retest that line. It could give us a head fake where it breaks to the top of this zone that was retested way back over here off this 1-hour chart. I'll put it on the 1 hour. This was the zone, came back, retested it. And the highest test point right here was right here. This is where it was finally rejected. And I like, actually this zone kind of goes on up. Here's a drop, here's a base, a drop, came back to retest it. We have a little bit of a base, so we kind of have a little bit of what we call level on a level. So here's the level. It's breaking through this one. Here was the high. Here was a high, came down, based, went sideways for a very short time, broke again. This was, I mean, now this one got broken, so this one doesn't count. So if I move this over, keep seeing where do I find the body? So the most likely, I put it right about here, and we'll see. And now I move this down maybe a little bit here. So we have a 15-minute fib line here. That's an institutional price point. And we have a zone where the sellers came in. Strong move up again. And and we'll see if it gets rejected. Again, we're going to look for that little flag pattern at the end of this to see if it's going to break and retest. This part, this wedge here is done. This one here is done. And now we have broke that, broke this, broke that. And now we have some basing over in here, and we'll see if it comes up into this zone. I'm gonna take this off.
Hey, Al, I'm gonna go pound yen short.
Pound yen. Okay, let's take a look at that.
We also just got an arrow alert.
The Euro Aussie.
Yeah.
Let's do Euro Aussie. How about that?
Let's go take a look at that one. Euro Aussie.
Yep, I got that one as well.
That's the one that we were. That's a buy.
Oh, we were
Aussie
doing
buy.
the pound Aussie.
Yeah, the Euro Aussie. That's basically the one that we were just in, I believe, wasn't it?
No, that was the pound Aussie that we were just
Oh,
in.
the pound Aussie. Okay, so Euro Aussie. Well, let's take a look at the Euro Aussie here. Since we're trading this is the system we're trying to show and trade here. Euro Aussie. Okay, so here is the, now this one, it looks, I mean, it looks better in some ways, but not so good in other ways. So here's the Euro Aussie. It says to buy at 58.15. So here's the arrow. Here's the close of the arrow. Now you see this is a green arrow with a, which would normally, here's the open of the candle. Here's the close of the candle. So that generated, which would normally be as a candlestick formation, a green candle. So we have a green candle moving in the right direction. Now the question is, here's the entry right here. Do we have 20 pips till we get to this zone? That's the question. Right now, this zone, the top of this zone is, here would be the entry. Here's the ideal entry down here. It's a little slow. Here's our, and measures to the top here. That's only 11 pips, not a trade. We have a zone right up here. It's too close to the zone to take that trade, so I'm going to have to pass on that. If we scroll in a little bit tighter, we'll see how many red bars do we have, how many green bars do we have as we scroll in. We have lots of red.
Oh,
we have
look at that.
1, 2, 3, 4, 5, 6, 7, 8 red bars. We have 1, 2 green bars. So now what I'd be looking at is that, am I going to take this thing long with all this red up here? No, I'm not. If it comes up here and bounces and gives me a down arrow like this one did, then I would take it. If there's room to the next green zone, if there's 20 pips to the next green zone, then I would take that trade. Right now, it's too close to the red, so it's no trade. And that's as simple as that. And so what was the pair that you were looking at, Matt?
I was looking at pound yen short, my friend.
Pound yen. Okay, let me put the pound yen on this chart. Do I have pound yen? Pound yen? I probably do. Oh yeah, here we go. It's right here. Here's the pound yen. Now, I'm not sure what Matt's looking at. This is on a all these are on 15-minute charts. Make sure this is on a 15-minute chart. I think it is.
Yeah, it is. If you're
Okay.
on your 15, yeah.
Yes.
And you're saying short on this one.
Yeah. Well,
Now,
that's what
are you what time frame are you looking at?
I'm actually looking at the 30-minute, but this is just my own setup, so this is not.
Okay, so we can't. So it's not part of the plan here. So
No.
we're
So
gonna
it's
keep
totally.
this. So as we look at this right now, 15-minute chart, no arrows. Now here we had an arrow over here. You can see as we tighten in on this thing. Now if we get a down, right now if we get an arrow, we have 3 red zones, we have 3 green zones, and if we got an up arrow, we can't take it long because it's right up here at the red zone. This arrow right here was generated as it bounced off of this red zone right in here. It bounced off, gave us a red arrow. And actually this red zone was right here as well. This one was generated all the way over here. So would we take this trade? No, we wouldn't, because we're right inside the zone. We're right inside another red zone, and we do have room to the downside. But the factor, I'm not sure if this zone may have been green at the time, and then maybe it turned red after it broke out. I do not know what the zones look like at this point. At this point, if there was no zone here, and you had a green target down here, you'd probably be okay taking it. And because your stop would be at the other side of this red zone. If you had green zone coming down, especially with, now, I just noticed something here. This was the overnight range. This is where the daybreak was. This Sunday, this was the overnight. This is here, the shaded area here is what they call the money zone. This is the London session, which opens up at 3 o'clock East Coast time and goes till noon East Coast time. This is the zone you want to be trading. This was outside of that zone. I would not take the trade because it's too much into too early. This is basically the Asian session. And but this is the area where most of the trades are profitable. So unless it's in this, with this technique, the 40 pip stop, the 20 pip target, it needs to be in the zone in the right direction with, right now it's about equal as far as like the red zones and green zones. But if I got an arrow here going short, I would take the trade because there'd be enough room. So like here would be, let's say we got an arrow on this one, which we do not, but we're just taking a look at it. We've got 32 pips to the green zone. That would be a viable trade. You have your stop would be all the way up here at the top. I like seeing when you have these levels on levels, I like seeing the stop being up. If it breaks to this, you still have this one. And oftentimes when you see a retracement, you also see they'll take out this zone, but this one will hold. So if I have a trade and it goes up where the stop is up here in the second zone as opposed to the first one, I feel a lot better about the trade because now I've got a barrier in between me. This last trade that we took with the Aussie, what was that, Eva, Matt, the Aussie?
That was the pound Aussie, the first one.
The pound Aussie. Let me go back to that one. Pound Aussie. Let's see where this is at. So this was a trade. Now we had the 20 pip. See, did we go short on that one? Yeah, we went short on it. Yeah,
we got stopped.
We went short and we got stopped out. Pound Aussie. We did get an up. This is where we entered. No, why is that? Do we have something's different here? Let me see something here. I just noticed something.
Because we went for the sell. You see the sell at 13.15.
Is this 13.15 here?
Yeah.
So that zone wasn't there. This green zone was not there when we got the sell.
There, no.
Because this was our target down here. Here's our stop. Right. And there was a red zone right about here, is where we got pretty much where we got stopped out. That zone's now gone. But now we have like a level at a level. Now it's showing a green arrow. It's showing it's above the moving averages. Green arrow, but look where it is. It's right up here into this strong area. Here's the first zone. This one's probably going to go away. There was a zone right. I think our stop was right about in, what was the stop at? The stop was, we got stopped out at 75.30. Right now the price is, it's already going past our stop by 75.40 right now. It's already went, but you see how this zone is still holding? This is what I was talking about earlier. If you have two zones on top of each other, the first one may get penetrated pretty deep, but the second, I would felt a lot better had the stop been up in this zone as opposed to this one. But the rule says you can still take it if it's 40, if you have 40 pips. We were a little bit deeper into here, but and you can see it just barely went up into that sort of base a little bit. Now it's ran on up some more. We have an up arrow. We do not take this trade because one, we have too many red zones above. Two, It's right here at the red zone. And so we have to, this would be a no trade. Now, if it comes up to this area, it gives me a down arrow, and I can get my stop up into this area with a 20 pip target, I'll take it again. So we'll keep an eye on that one.
So I just, I got my arrow over the weekend and I'm pretty excited about it.
Oh, good. Did you have any trouble getting it set up, Eva? Because
I originally I did because I couldn't find the indicator. Turns out they don't have it under expert advisor. They actually have it under indicator,
right.
which is
Yes,
not
it's an
somewhere
actual indicator.
I looked for it. I just need to be able to set it up so I get the alerts on my phone. Because as it is now, I just get them on my computer. So I have to be sitting here to see them. So I wonder if anybody else has got it in the room.
Yeah.
Anybody in the room have arrow? Could you put a 1 in the chat, please? Just so we know if you've had any kind of luck with, oh, Pedro, you have it. Good for you.
Okay. If you do, I'm going to show you, you mentioned about getting the alert on your phone.
Mhm.
Let me show you how that's done. We're still looking at the arrow chart, correct? I'll make sure I'm on the right
Yeah.
page. Okay. If you go up to, on the MT4 platform, if you come up here into your toolbar where it says tools, if you click on the tools,
Okay.
and you have a little drop down that comes into the options. What you do is you go tools and you go to the options tab on the toolbar, on the tools. Let me get back here again. Hit the options. And that's going to pull up a screen of the options chart. You can come over here at the second row where it says notifications. And you're going to click on the notifications. And you're going to have this top box checked, enable push notifications. Have that checked. This one doesn't need to be checked. And then on your cell phone, on the MetaTrader 4 app that you installed on your cell phone, you'll go to the settings tab. And on the settings tab, you go to the settings tab on the account chart that you're looking at. Halfway down the list, it will show chat and messages. You click on the chat and messages, and at the very bottom of your cell phone, you'll see where it says MetaQuote ID. And what you want to do is take that MetaQuote ID number and stick it in this box right here.
Okay, so now that's on your MetaTrader 4 app, you said, on your phone.
Yeah, the MetaTrader 4 app on your cell phone.
And where do you find that?
It's about halfway down halfway down the list of your cell phone. You'll see where it says chat and messages.
Chat and messages, I gotcha.
Click on chat and messages. And then at the very bottom, right about where your thumb would probably be, you'll see where it says MetaQuote ID number.
Yeah, I got it.
There's a number. You type that number into the box, and if you click on the test, your phone should ding.
Okay, that's cool. Okay, I haven't been following along with you, but I have just defined my MetaTrader 4 number, so that's good. I'll write this down and I'll get it done.
As soon as and then when you put that number in there and you click on the test, your phone should have a ding, and it should say arrow test message coming up, and that will set. And then all you have to do is click OK.
Do you download versions for iPhone, or is that the MetaTrader 4? It's telling you to download.
Well, you want to put in the. I use the MetaTrader 4 app for the phone. So if you go to your app store under MetaTrader 4, I use 4, not 5.
That I have, but you closed the box too quickly. There was I had a question on it, but that's okay.
I'll open it back up again. We've got time here. Here's the options.
Okay, download mobile versions. Is that the MetaTrader 4 version they're talking about, or is that the push notification version?
Download version, download mobile version. I would say download mobile version for your iPhone. MetaTrader. I use MetaTrader 4. I don't know. I don't ever use MetaTrader 5 for anything, so it just confuses me.
That's my question. Is what is that download that they're talking about?
Yeah, just go to your phone app store and just put in MetaTrader 4.
No, I have it. I have it on my phone. I'm wondering what this is. What this download is. It says download mobile version. I wondered, is that the alert version, or what is that version they're talking? Because it doesn't say anything about MT4 on here.
Yeah,
or
I don't,
anything.
I don't know. These are things to click on. These aren't really anything to click on. This is just,
Okay.
they're
So
just saying that just download the MetaTrader, the mobile version for your iPhone, or
okay.
the mobile version if you have an Android, do it for the Android.
So it must be the MetaTrader 4 they're talking about.
Yeah,
Then
it's the MetaTrader 4 that they're talking about.
Oh,
So
okay.
whether you have an Android or an iPhone, doesn't really matter. Just download the MetaTrader 4
Okay.
app for your phone.
Yeah.
And
Yeah.
then,
That's done.
yeah,
So,
and then you'll see this ID card as you go to the chat message, go to settings, chat and messages, and then click on the chat and messages, and that'll show you where your MetaTrader ID card number is.
ideas. Okay.
Okay.
Sounds good. Thank you so much.
Anybody have any questions about that?
What do we have in the?
Yeah.
Oh, it's thanks, Pedro. It's MT4 mobile version. Okay, so that's what that download mobile version is.
Yeah.
Okay, so
And you
that's
click OK,
yeah,
and you're all done. You're all set.
It's pretty simple, eh? And when we got things set up like this, it makes life easy.
And let's see what else have we got here. So our first trade of the week here was not a real successful one, but that's just, we have the whole week to make it up and see. You can see if you look at the, say, well, right now we'll keep an eye on the alerts, see if we get any more alerts here. We might get another one here in another few minutes. Usually it's not unusual to get 2 or 3 alerts all at the same time from different pairs. But we'll just wait for the alerts to come in and we will take it from there. Until then, we'll go back to, I'm going to keep looking at this US CAD chart for the analysis aspect that we're looking at. And that's going to be screen 4 here. And you can see how this move came up. This was the end of the 15-minute candle, or actually 1 hour candle. This was at the close to 9 o'clock. Remember, a lot of times too, we say that there's a strong move between 8:30 and 9 o'clock. There's oftentimes a strong move. If I move this down to a 30-minute chart, you'll see that it started about 8:45. Here's the 9 o'clock close. This is coming into the 15-minute candle, which is the close of the, and you can see where it's starting to move this out of the way. You can see where strong move, here's a strong move up. There's how low it's finding some sellers are coming in right here. You can see how this thing came up, pulled back. This zone right here is, we're looking at basically a 13 pip candle right here on this 15-minute candle. I like using the 15-minute chart just to start getting my range for the trade. So we have that, and we're going to put here's the high, here's the low. We're going to flat top this. And we're just going to bring this up just a little bit, just so we keep a wedge going, because it's going in this upward direction. And I'm bring this all the way out here to where this is all straight across. I'm going to wait and see if it gets into this area to break down. This is just the technical analysis of the price action. Here's a wick up. Here's a wick down. Actually, this one, you can see this red candle broke the open of this blue candle right here. That's why I can use this for reference. So this is now the new range. Here's a high. Here's a low. It broke the range of this candle where the A is. It broke the range of that. And so that's why this now is starting to begin forming lower highs and higher lows. After a strong move up like this, we could be looking for maybe a retrace. And here's a fib zone here. Here's a fib zone here. Let's go to our 5-minute chart. And again, remember we said that this was the area where it left. This is the area, this white, between these white lines is where it was down, came up, tested, based, broke out, come over here. Keep on going over. This is all the way back in December, I believe, January 5th. And you can see where it came and it broke down, came up, tested it, came down, retested it. So this area where the white zone is, this is a very significant price point area. You can see it's right in the middle, right? It surrounds this 15-minute fib line. So when this thing breaks, when this thing had this nice move to the upside, when it had this nice move to the upside, it's running into the supply zone, came up. Now we're waiting to see if it's going to break. If this thing breaks from up here, we're looking at to retest down here. And that's where we're sort of, so right now we're just sort of stalking and hunting this thing. It's not quite ready to give it up yet. Too bad we didn't catch that trade. We had another alert that we're looking at in the meantime. Any questions so far about what we're doing here today? Any new people have any questions? Feel free to type in the questions in the question answer box. We're here to make sure that you don't get overwhelmed, make sure that you understand what we're talking about. We have some time to discuss some of these things. There's no trade set up right now that we have.
Yes, Pedro says that we have a pound kiwi buy on Arrow.
Pound kiwi, we do?
Yes.
Why did I not get that?
I don't know.
Pound kiwi, well, let's take a look at that.
Pound kiwi.
Why did I not get that alert, get an alert for that? But you're right, I think he's right.
Look at that, Pedro, you're right.
Let me go into the chart here.
Thank you, Pedro.
Yeah, I didn't see the alert on that one. Or did it come on my phone? Let me see. Nope. But it's certainly there. There's no question about that. We have the arrow. Let me get over to the chart. This chart. All right, here's our chart. We have we have a few more red bars over here than what we had the green bars down below. We are in the money zone. We have a green bar. Do we have room to the upside is the question. Here's the top of here's the zone, here's be our target zone. Here's the entry right here. That looks like 60 pips. Lots of room to the upside. And let me see on the chart here. I'm gonna check something out here first. Pound kiwi. I would say it looks like it's a, I would say it looks like it's a good trade. Let's see if we can get back into where the entry was. The entry on this one looks like it was. Pedro, did you get an alert for this? I'm kind of curious.
Yeah, he got an alert, I think.
And what was the
Yeah.
alert number on, what was the 8803, it looks like is the entry on this.
88039, yeah.
And right now it's at 880, what's the price right now?
6361.
Okay, let's see if we can get back to 8803. It's at 8808 right now-ish. That's showing 8805. That's within 2 pips. The spread on this one, it's got about 3 pip spread on it. Let's see, on Awanda's got 3 pip spread, 4 pip spread. Spread's kind of wide. Now we're 02 and 010. So right now we're at a 2 pip spread on it. That's within range, within reason. Okay, I'm going to take a buy on this one. Take the buy. We have an up arrow. We have room to the top. And we're going to go with a modify. We have 40 pip stop, 20 pip target, and click the blue bar below. I'm going to, here's my target, here's my stop. Lots of room. We have pressure to the upside. This looks like it could be a nice little trade.
Actually, I took this one too. This is my first arrow trade ever.
All right.
Yay!
It's the
Congratulations.
inaugural trade.
I actually like this one with a little bit more, with even a potential more of a target on this one. But I'm just going to follow the rules. 40 pip stop, 20 pip target. If you start seeing it getting really strong, you may just want to go ahead and maybe move your target up a little bit so you can get a few more pips out of it. But there's nothing wrong with just following the rules. Just say, no, be happy with 20 pips. Be happy with 20 pips. Well, this, I mean, even Nathan says a lot of times if he's sitting there watching, he may move his target up a little bit higher to the zone, and then once he gets his 20 pips, he may move his stop up to, or he may take a partial position off it and just let the other one run. There's nothing wrong with that. That's not really breaking the rules. I think the rules are keep your stop where it is and go for at least that target. Now you can make some modifications as your trading personality adjusts to that. But I've been basically just set it 20 pips, 40 pips to stop, and go on to the next, and start looking for the next trade. So we're in this trade. I'm in this trade right now, and we're just going to see where it goes. If it goes to, our target is 88.29 is my target. I'm going to go ahead and set an alert on another chart here just for that, so I know where that is, just so I have a reference for it.
So Pedro is asking, isn't one of the rules always follow the trend? Actually, it's not really. It is, but it isn't. Right, Al?
Well, I'm seeing 3 red zones on the top. I'm seeing 3 green zones on the bottom. So I'm still looking at it's going sideways inside this range. We're about in the middle of it. And I see where you've got 20 pips to the upside where the alert was. You still have momentum going up. You still, it just kind of crosses the first candle. And you're
if it's above the blue line.
Right.
Yes.
Well, it's above the blue line. You got the arrow. You've got a strong move up. It may pull back a little bit, but you've got your stop below where the alert candle was. It's below that the open of that candle, and your target is only 20 pips away. So yeah, I was, in my mind, it still follows the rules. We're still inside the money zone. We have equal number of red zones and green zones on top and bottom. It's inside this range. And there's no reason not to think that you should be able to get 20 pips out of that.
Al, what did you, if you don't mind, what did you pull it out on to see how many green bars and how many red bars?
I just go up here to the little, up here to the toolbar where you see these little magnifying glasses with plus and minus, and you click on the minus one.
Oh, I didn't. Oh, I didn't know if you went change time
Yeah,
frame.
and you just click on the
Well, you
minus
can
one.
actually change the time frame too.
Yeah, you
Right.
can change the time frame. I don't change the time frame. I keep it on the 15-minute because that's what we're trading on.
Okay.
But I mean, you can see right now is that as I scaled in, now I don't even see any red bars up here.
Right.
As I scale in a little bit tighter, let me see if what it looks like when I scale in tighter. There again, I'm back to 3 and 3.
Mm-hmm.
So if I scale in one more time, I don't know if we'll go more and more or not. And now we have actually 4 and 3, but
5.
once
Actually,
yeah.
5.
But we had a strong move down, bounce, and you can see right now it looks like it's kind of trending.
Mm-hmm.
Strong move down, come back. Here's a high, higher high. Here's a higher high.
Right.
So it's and our stop is right here. As it basically this is looking a little bit almost like what that British CAD trade did, where we had an upward trend. It broke out of the trend. Here's a little bit of here's a high, here's a lower high, here's a low, here's a higher low, and now it's starting to make higher highs. Yeah, I'm certainly okay with taking this. You can see it's got some momentum on here.
Mm-hmm.
Expand this out just a little bit more so we can see the candles a little bit better. I like being able to see this little space in between the candles. Now I can actually see the price action a little bit better. That's me. Some people like it real tight. I like to be able to see the wicks and the bodies clearly.
Yeah, I can't get mine to be that big of a chart. I can't even see my arrow pips.
Really?
Yeah.
I'll have to work on your MT4 platform then. There's something not right there.
I think it's the VPS.
Do you have it on the remote desktop?
I have it on the, well, however it is that I get it to work on my Mac is how I have it going.
Oh, that's right. You have a Mac. That's right. That may be another issue.
Which I don't understand why it should be, to be honest.
Well, it's a different operating system. I think that's probably.
I know, but still, it should be. Nowadays, everything is both PC and Mac compatible.
Yeah, but MetaTrader 4 is so antiquated that they never worried about making it work on Mac.
Yeah, it's too bad.
It's been around forever.
Well, Mac was the first computer before the PCs came around, right?
No, I think it's the other way around.
No, it wasn't. Mac
IBM,
was big.
Apple was after PC. Microsoft, well, PCs were around before Apple came out. Apple just early on, back in the 70s, when Apple first started getting really big, the business world had PCs, the education world had Apple. Apple really got into the education system with the schools. So if you're looking at an educational application, you pretty much went Apple. If you're looking at a business application, you pretty much went with a PC. And it's pretty much stayed that way up until we became more internet and web-based. Now it becomes less and less of an issue because a lot of stuff is web-based. But for some of these more antiquated business programs, it's still, especially in the trading world and the financial world, is still primarily PC based. It's changed a lot over the last few years, but that's still pretty much the history of it. And actually really wasn't until everything became web-based, like, for instance, like TradingView is web-based. It doesn't really matter because they both apply to the web.
Well, according to Google,
Oh my goodness. Oh my goodness.
Apple was first. It was introduced the 24th of January, 1984. Microsoft quickly took over the world's PC market, but it was the first GUI computer was an Apple.
First G.
And I remember that. I
What is
actually
G?
remember it.
This is 84.
Yeah.
Well, I
What
know
is-
the I know the Apple IIe came out somewhere around 1970. I'm going to say actually probably 1980, 1983, 84 area. That's when the Apple IIe came out. That was their first educational base. That was the big one that came out with the Apple
Yeah,
IIe.
now I'm not talking business. I'm talking now personal computers, right?
No, that's what I'm talking
That's what
about too. I'm
people
talking
had in
about
their
personal
homes and stuff.
computers. But
I remember because my girlfriend worked for them.
But I know Microsoft. This was back in 1980. Let's see, 1982, I guess it was. The PC was. That's when they came out with the Intel 8088 microprocessor, which had a full 1 meg of RAM on it.
Okay, you know what? Let's get back to the room for a moment because I've got a question for you. I think we can have this debate later.
Okay.
He says he missed when you wrote this about the rules, I guess. Can you please explain this?
Oh, I was talking about Pedro.
Oh, that's you,
chat.
Christine.
So, yes,
I'm
that was
sorry.
a personal comment to Pedro, because I didn't know when he wrote out, but isn't one of the rules always following trend? So I didn't know
Sorry.
what part of the
I saw
chart.
Pedro's name and I thought he had written it.
Nope. Me.
Yeah. Yes, the rule is to follow trend. Now the question is, you have to be as we scroll into as we scale into the zones, I guess you could say, as you make the candles tighter and tighter together. I mean, as I look at my 15-minute chart and I scale in, right now all I'm seeing is green on the bottom. I'm seeing any red on the top up here. Now I go up one more, and then you're going to see, yeah, now you see you have 3 on top, 3 at the bottom. I'm still looking at this thing is going sideways. It's basically inside these two, and there's lots of room to either side of this thing. I mean, you can as you go tighter and tighter. Now, if I go one more microscope down, I guess you could say, yeah, now you have more red on the top. But you can also see when we measured this out to the next zone, we're measuring 60 pips. We're only trying to get 20 pips out of that. We had a strong move up. We already had the pullback. It came back up, retested, strong candle up, gave us the green candle, and we're just trying to go for 20 pips. In what is I would call relatively a sideways zone. Now this is a little bit of a flag pattern. If you look at this from this move down here all the way up here, this is a little bit of a flag pattern, and the retracement on this is probably this area right here is probably going to be roughly 40 to 50% retracement from this high down to this low. And I think it still has a little bit of room to go to the upside. I mean, we had a nice move up. Again, you're only going for 20 pips. I'm not going for the full 60. I'm just going for 20. It was well within the zone. We had room to the downside. We had the candle, or we're going, and we have 60 pips. We're only trying to get a third of that. What I'm a little curious about is though that Pedro got the alert on that and I didn't, and I don't know why that is.
Ava, did you get that alert?
Which one?
On the GBP and Z.
Yeah, I did. I thought you said you got it, Al. Didn't you get it?
I did not see it. And now what may have happened is maybe I turned my my indicator, although I didn't get it on my phone either, so I don't see it anywhere. That's why I'm kind of curious as to why I didn't get that.
I got it, but it didn't pop up on my phone. Maybe I set up the phone after they came through, this one in the GBP CAD, but it did come through on my computer.
And maybe I had the alert here. Maybe I didn't catch it before I turned it off, took it off. But thank you, Pedro, for calling that one out for us.
Everybody helps in this room.
Yep. And with that, it is 9:40. 6:40, so we're already 10 minutes past our time here. So does anybody have any more questions before we, let's see, the U.S. market's open. We're in a trade with this, keep an eye on this. I'm in a trade. I don't know if you took it or not, but I'm in it with the British New Zealand. And with that, if there's any other questions, ask now. If not, we will see everybody tomorrow. Same time, 8 o'clock. We are looking to change the time of this. We haven't got approval yet from the company yet. So right now we're still on the 8 o'clock to 9:30 schedule. We are working on it. As soon as we get the go ahead from the company, we'll probably make the change to 7:30 and we'll let everybody know ahead of time when that happens. So with that, going once, twice, last question. And with that, we'll see everybody tomorrow. You guys have a
great
good day.
day, everyone.